Thank you for standing by. This is the conference operator. Welcome to the ATCO Limited Third Quarter 2019 Results Conference Call and Webcast. As a reminder, all participants are in listen-only mode and the conference is being recorded. After the presentation, there will be an opportunity to ask questions. To join the question queue, you may press star 1 on your telephone keypad. Should you need assistance during the conference call, you may signal an operator by pressing star 0. I would now like to turn the conference over to Mr. Myles Dougan, Director, Investor Relations. Please go ahead, Mr. Dougan.
Thank you, Savis, and good morning, everyone. We're pleased you could join us for our third quarter 2019 conference call. With me today are Executive Vice President and Chief Financial Officer, Dennis DeChamplain, Senior Vice President and Controller, Derek Cook, and Vice President, Finance, Treasury, and Risk, Colin Jackson. Dennis will begin today with some opening comments, financial results, and recent company developments. Following his prepared remarks, we will take questions from the investment community. Please note that a replay of the conference call and a transcript will be available on our website at atco.com and can be found in the Investor section under the heading Events and Presentations. I'd like to remind you all that our remarks today will include forward-looking statements that are subject to important risks and uncertainties. For more information on these risks and uncertainties, please see the reports filed by ATCO with Canadian securities regulators. And finally, I'd also like to point out that during this presentation, we may refer to certain non-GAAP measures, such as adjusted earnings per share, funds generated by operations, and capital investment. These measures do not have any standardized meaning under IFRS, and as a result, they may not be comparable to similar measures presented in other entities. And now I'll turn the call over to Dennis for his opening remarks.
Thanks, Myles. Good morning, everyone. Thank you very much for joining us today on our third quarter 2019 conference call. ATCO announced adjusted earnings in the third quarter of 2019 of $74 million compared to $87 million in the third quarter of 2018. Lower third quarter earnings recorded in Canadian Utilities and ATCO Investments were partially offset by higher earnings in Structures and Logistics and Neltume Ports. Structures and Logistics achieved $10 million in higher earnings in the third quarter of 2019 compared to last year's third quarter. Higher adjusted earnings were mainly due to the continued work on the LNG Canada Cedar Valley Lodge project, higher space rental activity in Canada, and higher workforce housing trade sale activity in the United States and Australia. In Canada, manufacturing and site construction work for the LNG Canada project is well in hand, and our Calgary manufacturing facility is operating at near full capacity. The project is going well and is progressing on schedule. In the United States, we completed a $7 million contract to supply modular product for a Marriott hotel situated near San Francisco, California in the third quarter. A second $7 million contract to supply modular product for a Marriott hotel in Oakland, California is expected to be complete in early 2020. In Australia, manufacturing commenced on a 400-room, 2-story accommodation village in Karratha, Western Australia. The total contract value is $22 million, with the final handover expected in April 2020. Our modular structures team also completed the final handover of a 600-person camp in Western Australia this quarter. The total contract value is $27 million, with ongoing rental earnings from the initial date of occupation in August of 2019 through to early 2021. Neltume Ports also contributed $2 million in higher earnings in the third quarter and was awarded a 25-year copper concentrate loading contract at one of its Chilean ports. The contract extends the concession agreement at the port for another 15 years to 2041. These higher third quarter 2019 earnings in Structures and Logistics and Neltume Ports were more than offset by lower earnings in Canadian Utilities. Lower earnings were mainly due to favorable earnings realized in the third quarter of 2018 associated with the Balancing Pool's termination of the Battle River Unit 5 PPA. ATCO Corporate and Other also recorded $12 million in lower third quarter 2019 earnings, mainly due to lower income from ATCO Investments as ATCO Investments completed 2 commercial real estate transactions in the third quarter of 2018. Our objective is to unlock the value of these investments over time, and we will continue to explore how to maximize value for our share owners from this business. This quarter, Canadian Utilities finalized the sale of its entire 2,100 megawatt Canadian fossil fuel-based electricity generation portfolio in a series of transactions and received $821 million of aggregate proceeds on the sale. This resulted in ATCO recognizing an gain on sale of $73 million, which is after tax and non-controlling interests, which is excluded from adjusted earnings. Financial strength was confirmed in the third quarter as Dominion Bond Rating Service affirmed their A-range corporate credit rating and stable outlook for ATCO, Canadian Utilities, and CU Inc. And S&P Global Ratings affirmed their A- credit rating and stable outlook for our companies as well. Overall, it was an active quarter at ATCO throughout America, Latin America, and Australia. We made progress on a diverse range of modular project structures, extended the contract length on one of the concessions at Neltume Ports, and we completed the sale of Canadian Utilities' Canadian fossil fuel-based electricity generation portfolio. That concludes my prepared remarks, and I'll now turn the call back over to Miles.
Thank you, Dennis. And we'll turn the call over to our conference coordinator for questions.
Thank you, sir. We will now begin the question and answer session. In the interest of time, we ask you to limit yourself to 2 questions. If you have additional questions, you are welcome to rejoin the queue. To join the question queue, you may press star 1 on your telephone keypad. You will hear a tone acknowledging your request. If you are using a speakerphone, please pick up your handset before pressing any keys. To withdraw from the question queue, please press star 2. Webcast participants are welcome to click on the Submit Question tab near the top of the webcast frame and type their question. The ATCO Investor Relations team will follow up with you by email after the call. Once again, anyone on the conference call who wishes to ask a question may press star 1 at this time. We will pause for a moment as callers join the queue. Our first question comes from Maurice Choi with RBC Capital Markets. Please go ahead.
Thank you and good morning. My first question is on structures and logistics. The margins on, I guess, this quarter seem to be higher than some of the previous periods. I wonder if you could just discuss what is the what is the origins of that? What are the contracts, the types of contracts that you record revenues this quarter, or is it an indication of the whole contract and periods forward? And alongside that, if you could just provide your activity levels over the next few periods.
Good morning, Maurice. In our in the MD&A, we show the average rental rates, from our space rentals business and our workforce housing business. In there, you can see the rental rates from our space rentals are up 14% year over year, and our workforce housing up 20% year over year. A lot of that, the space rentals increase due to increased activity central Canada and British Columbia. In terms of workforce housing, we have higher rental rates coming out of Australia with some of the large mining projects and recently installed workforce housing in British Columbia. So we've definitely seen the uptick on the new side. We're having, I'll say, good cost containment, so that will result in increased margins through the business. As we trend back a few years when the business made $6 million in the full year, then we were able to double that and again have a healthy increase year over year from those levels. If you just take a look at the base run of the business, we've said we've increased that base business through increased diversification in our markets and with our customers, trying to diversify away from the commodity-based oil and gas resource sector. So you're seeing the benefits of that strategy result in kind of that increased base business. Not going to give you our forecasts over the next number of quarters, but we're proceeding nicely at that emphasis on our strategy of diversification, both in markets and in products. So we're continuing on that trend. We would, year over year, our base business in the third quarter is very healthy, and we hope to continue that in the future.
And any insight on your order book or potential contracts to come?
We've got we've got a very healthy lead list. It's a little bit lower at the same time last year, only because LNG Canada was on our lead list and we were able to put the puck in the net on that project. But I'll go back to the lead list being well diversified by region. If you take a look at Mexico, Australia, United States, British Columbia, Alberta, so we're well diversified by geography and by contract type. Natural resources are still, say, the majority, but we do have kind of government contract leads, housing, and other such new customers from our historic past.
Great. And just moving on to Neltume Ports. I gather that Neltume Ports continue to have a high level of cash in the underlying business following your investment. But I suppose with you already invested in the business for just over a year now, has it always been your investment thesis that we continue to be at this state of activity, or did you wish that there's more investments from the investee?
Well, that cash is still sitting in Neltume's balance sheet. Like, even with the extension of our copper concentrate contract and new capital loading facilities required, that will be self-funded by that port and will not draw on that circa $200 million sitting on Neltume's balance sheet. So we do want that cash to be put to work. We expect that cash to be put to work through greenfield, brownfield, M&A activities. That hasn't happened yet, but I know they have a lot of irons in the fire, and we're looking to deploy that capital and grow that business.
I guess if you sit this time next year, would you be disappointed if all $200 million is not already invested?
All $100 million, I would expect some to be deployed. Right now, that the results we're seeing from Neltume are achieving our base case that we based our purchase on. So we're still happy with the investment. But going back to what I had said earlier, we still expect to deploy that cash, and they're actively seeking projects. Take a look at what's happening with world trade and the geopolitical environment. It's kind of understandable. There's a little bit more uncertainty right now, so there may be a little bit of cautious optimism as we proceed to expand our ports business.
Great. Thank you very much.
Thanks, Maurice.
Once again, to ask a question, please press star 1. Our next question comes from Mark Jarvi with CIBC Capital Markets. Please go ahead.
Thanks. Just maybe continuing along some questions on Neltume. Do you anticipate the civil unrest in Chile to have any impact on the near-term results?
Good morning, Mark. Thanks for the question. No, we do not expect any major impacts from those civil unrests. I mean, that's a very sad and unfortunate situation. We at Neltume have kind of prided ourselves on our labor relations. There were general strikes called. We were able to stay open the vast majority of our ports. Our workers were safe. We didn't lose any incoming cargo or outgoing cargo as a result of the unrest. There were curfews, so we did scale back on some overnight shifts. But because we were open and other ports weren't, we were actually able to pick up a small incremental number of ships for unloading, which will help the business. But no material impact in the short term.
Okay, that's good to hear. And then you did put a NCIB in place earlier this year, and obviously you've got a long track record of growing the dividend. Any updated views on capital allocation? If you struggle to find new investments, how do you guys think about maybe just again excess capital towards either the buyback or dividend increases over the next couple of years?
Yeah, we haven't executed on the NCIB in any material shape whatsoever. Our dividend views are unchanged. We grow them in the based on the existing payouts, the long-term growth of the business. So we'll be taking a look at that when we set our 2020 dividend recommendation to the board. In terms of ATCO, we want to limit the leverage on ATCO's balance sheet. We still have some credit facilities and debt outstanding from the Neltume purchase. We're continuing to look for acquisitions, but as we fully digest the Neltume purchase, we'll be heading out looking for more. We are looking for more, but executing on future growth projects down the road.
Okay, thanks. I'll leave it there.
Thank you.
This concludes the question and answer session. I would like to turn the conference back over to Mr. Milgan for any closing remarks.
Thank you, Savis, and thank you all for participating this morning. We appreciate your interest in ATCO, and we look forward to speaking with you again soon. Bye for now.
This concludes today's conference call. You may disconnect your lines. Thank you for participating, and have a pleasant day.